Should I be putting money in a Roth IRA or a 401k or both? Let's go into a case study on this. Let's get into it. I know there's a lot of numbers, but just stick with me and I promise it'll make sense. So we are assuming that you're 35 and your current salary is $90,000. You're gonna get 3% yearly raises. Then your first thing that you get is you get a 50% match on up to 8% of your salary in a traditional 401k. No matter what anyone tells you, that is free money at a 50% rate of return because it's a 50% match. So we're gonna take that all day. I don't care 401k versus Roth and the tax side of things. We're gonna take the free money. That's why I put it up there. Then I have this thing called the standard deduction, which we need to know for current year taxes to see which one between the 401k and Roth makes sense after the employer match. So when we take your salary of $90,000, we minus the 401k contribution that you did for the employer match of $7,000, and we minus the 2025 standard deduction of about $15,750. Your current year taxable income is $67,000. Now, why that matters is that puts you as a single individual in the 22% tax bracket. So we need to see, is contributing to a 401k now going to save us more than 22% in the future versus a Roth? That's what we're trying to get at. So then what I did is I took that $90,000 salary and I predicted that out with 3% raises to age 65, which gets you about $218,000 in salary. Then I said, okay, in retirement, we're not going to be contributing to our investments anymore. So we can probably live off of 75% of our salary. So we'll need to withdraw 164 grand, whether it be from Social Security, pension, or from your retirement accounts. So at age 65, I also had to predict out the tax brackets. Now I went conservative here with a 2% increase there because I didn't want to say, hey, this thing's going to rise with whatever inflation is, 3-4%. And so at age 65, your tax bracket in the 22% will be from 87 grand to 187 grand. So your future desired retirement income of 164-ish thousand still falls in the 22% tax bracket. So way back up there, if we take a current year tax deduction, we get a 22% save. But in the future, we'll probably still be in the 22% tax bracket. Now, again, it depends on current rates and things of that nature. So regardless, in this scenario, there's no arbitrage there. So I would put my next dollars in a Roth and let those suckers grow tax-free so I don't have to worry about the politics side. You know, that was a lot, but that's just how my brain processes. Am I going to do Roth or 401k or a mix of both? There's a lot more that goes into it other than 50-50 or do this or do that, and I hope that makes sense. Chris Lee, Everyday Finance, talking about Roth versus 401k, and I'll see you in the next one.